the bears are going to be taking over. Hello Adrian, and welcome back to another episode of the Dang Oracle. It is 7:30 p.m. UTC +8. Hope everybody is doing well on this beautiful Thursday evening. Let's wait a little bit until the hardcore gang is here. Oh, there we have it. Hi Lex, hi Darren, hi Cedric. Hi, how are everybody doing here today? Hi Darway, hi Piotr. So, well, while everybody is joining in, let's take a look at some COVID numbers, like as a warming up, like we always do. So, in the US, we are, well, over 2.1 million cases. It's been going up quite fast as well. Brazil is, hi Laxman, hi Gita. Brazil is getting there as well, close to the 1 million cases. Russia over the 500,000 cases, and the next problem country is India with 350,000 cases. Ooh. Let's take a look on the chart how everything is looking. My favorite candle on the 4 hour. Well, the 4 hour candle is not closed yet, so you can't say that it's a dodgy candle just yet. Hi Shamir. So, oh, I didn't refresh it yet, I think. Oh, yeah, I did. So we are over 8 million cases. The only positive thing on this chart is right now, if you can see it, yes, we have a negative slope right now towards the downside. So that's very positive. Let's take a look on the US. Well, that's not positive at all for the US. Brazil, that's not positive as well. Russia, that's not positive as well. India is apparently starting to going more sideways. And well, we've looked at Spain is also, oh, and now Peru is in our new top 6 right now. Peru is, like I said, South American countries are having a big problem right now. European countries are slowing down and doing well, better of course, and improving, but it's the South American countries that are heavily under fire right now with the COVID cases. Okay, so those are the numbers. Nothing that much different, of course, on a daily basis, but yeah, it does affect some stuff, of course. Hi Gil. Good morning, good evening. Yeah, you're watching from the US, right? So I assume that it is morning for you. Yeah. Anyways, let's go immediately into Bitcoin. And whoa, why does it keeps repeating what Gil is saying? That is not good. I have no idea what is going on. It just keeps on repeating. Hi Adam. Gil, what is going on? You broke the system. You broke the system. Oh, okay, so whatever Gil is saying, it keeps repeating on my stream. Is it showing for you guys as well that it keeps on repeating? I assume it's also for you guys, right? That you can see it, that it keeps on repeating. It's very weird. Very weird. Some bug again. Hi Alvin. Okay. Anyways, I don't know what it is, but apparently, let's see. Can I stop it somehow? I don't know how to stop it. It keeps refreshing. Hi Mongol. Yeah, I have no idea what it's going on. Most likely some update, some error on YouTube or something like that. So yeah, nothing I can do about that. I just have to wait until this gets fixed on the next update, most likely, or something. Until then, you will see Gil messaging and spamming the chat. I think. Gil, can you still remove it? Can you remove it from your chat? I don't think you can remove it. Yeah, Gil, can you maybe exit the stream and rejoin? Maybe that helps. What Zcar is saying. That's very weird, though. This is the first time that happened, right? Or retract the message, yes. Or can you retract the message? Okay, both messages are retracted right now. So let's see. Oh, it stopped. Thank you, Gil. Thank you. Wow, first time for everything, right? First time for everything. I'm happy that somebody pronounced your name correctly. Anyways, we have quite a lot to be talking about, actually, because yeah, yesterday it was quite interesting what was going on, and like I said, there were two probabilities. Well, there's obviously more than two probabilities, but the two scenarios that I was looking at was either we form some sort of like a falling bull flag, falling channel, or a bull flag, and somewhere pulling back around to the 9.3k ish area and move up from there, or we would just break out of the bullish pennant and go up from there as well. So those were the two scenarios that I've spoken about yesterday. But I was just waiting for two things, either to be breaking up above 9.6k, which was our previous local high. That would trigger me immediately, basically breaking out of the bullish pennant, and if not, entering the long position around the 9.3k, which is the second scenario obviously happened. And yeah, that mainly basically says that I am in a long position at around 9.3k. Well, it's a little bit below that. 9,290 or something like that is my entry, my average entry. So yeah, that's where I am at right now. I'm in a long right now on that position. But it was quite interesting to show you guys, because okay, let me remove this first, because that's what is going on right now. I just wanted to show you guys basically what is really interesting, and go back in time a little bit, so we can, like, you know, understand how we should be monitoring and how we should be doing technical analysis or backtest things, right? So this is basically where we were at yesterday, right? So yesterday we were talking about it, and we had these two possibilities. So first I was telling you guys, either we have some sort of a bullish pennant. Oops. Second. Make it a little bit prettier. We have either a bullish pennant like this, something like this, right? A bullish pennant here on the RSI as well. Boom, boom, boom. So there, some sort of a bullish pennant, and there was probability if we would this would be confirmed, a breakout of that that pennant, if we break above 9,600, right? If we would break out above 9,600, I would instantly click long and aim for the next green box to the upside. And although we had a nice push towards the upside, it never broke that upside. And I'll play it so you can see it. So we got this next candle. Bam. Okay, so as you can see, this is a beautiful reason why you have to be very patient in this market, and definitely when you're trading, and that you have to have your master plan ready. And as you can see right now here with this candle, you can see, so price did try to break out of this bullish pennant. Well, it's not a bullish pennant, right? Because the formation was not completed just yet, but it broke out to the upside. But as you can see here, it never broke the previous high, right? So for people who that's what the algos and the bots are doing, right? So they're pushing it out for the people who just, you know, are trusting this formation, this pennant, and they're saying, oh, I'm gonna miss the train. So they're literally putting your FOMO to the test, your patience to the test, and they push it up just at the previous body of the previous two high candles. As you can see, it's exactly, if you put a line, you will see that it's exactly there. Right, let's make it a little bit more pretty. You can see it here, and I'll put a line here. Boom, you can see it's exactly to the body. You see the body of the previous candles, and that's on purpose, right? That's really literally on purpose that they're doing that. And then what happened is, of course, afterwards the price gets immediately pushed back down into the pennant or the triangle or whatever we're thinking about. So all these people who were, you know, in a position of longing, or, you know, trying to long or thinking we have broken out of the pattern, and they didn't set up a correct plan to break this high, local high, they got screwed over, right? And then what happens, of course, the bots and the algos are pushing the price immediately down towards the bottom of the range, and we touch near the EMA 200, where I told you guys that most likely, if we are patient enough, we will most likely be seeing that. And then, of course, when the price gets pushed down, imagine if you longed it around here on the breakout, and you see the price gets pushed down immediately down towards this area here, below the pennant. You will be automatically in shock, and you'll be like in panic and closing your positions or whatever you're gonna do. You know, a lot of panic trading. So yeah, that's basically what I wanted to show you guys, to obviously take notice in the future, right? Those are the kind of situations that are happening so often. Like I said, wait for the market to be showing you what it wants to be building or forming, and then basically this is what happened. Like I said, we formed some sort of like a bull flag, right? Instead of a pattern, instead of a bullish pennant. Sorry, bullish pennant. We formed some sort of a bull flag instead. Well, actually, it became a broadening wedge, but of course we don't know that, right? But what I was expecting is some sort of like a bull flag like this, right? At that point, some sort of like this. And I told you guys, if we are doing a Fibonacci ratio retracement from this bottom here to this top here, so yeah, so I told you guys this was the area that I was looking at, 9,300 ish area, or our EMA the EMA 200, or the purple line, or the VWAP ratio that is right here with the protection, And what happened with the price? Of course, it went down, and it actually wicked a little bit below it. And now we can go to the next 4-hour candles. Boom, there you have it. So it went there into our area, which is our buy-in zone, in between that area, right? Between the 0.5 Fib level and the golden pocket ratio at 0.618. And basically that's where I laddered my entries. And yeah, that's how I got into my average entry, right? So that basically explains the reasoning, or the explanation on how I got into my position. But what happened with this pushing it down, instead of a bull flag, we sort of have a broadening wedge instead, right? So we can remove this now, exit, poof, back into our candles. So what happened is we have some sort of a broadening wedge that we have on right now. Whoop. Let's move back into our formation. Choop. So we have something like this. Doop, 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 doop. There. Oops, I just want to make it as pretty as possible. Okay, as correct as possible. Okay, so yeah, so we have this broadening wedge, and basically a broadening wedge has the same, pretty much the same probabilities into breaking up as a bull flag or a falling channel, right? So the only difference is that we have a spike towards the downside that is a little bit higher, or a little bit lower in this case, because it's the descending broadening wedge. So it spiked a little bit lower than I expected, with a channel, of course, and that's how we got this wick all the way down now to 9,219, I guess 9,219, right? So this candle is actually very, very important as well, of course, because in the future we can put this as our stop loss candle, right? This is our stop loss moment. So my entry at 9,290, it will automatically have a stop loss if we break price below this previous low, because it's quite obvious if we are going to be closing candles below that price. Like I've told you guys, that will automatically become a domino effect for not only the 4 hour, but for the daily, for the 2 day, for the weekly. Everything is going to be starting to get crushed down. If we close candles below this 9,220, I believe that we will immediately go down towards this bottom area of the bullish channel. Let's put it like that. But like I've said, explained it before already, if we keep testing this channel, of course at one point it's going to be breaking, and I do believe that the next time we test it, we'll be breaking it, because we've already tested this EMA 5512 3 times now. So most likely the next time that we go, I would be aiming towards a break, like maybe, I'm not saying that we won't get a small push, but most likely something like this is going to be happening. So if the price does get closed below this 9,219, I will immediately switch over into a short position. So my long is not longer going to be staying there. But for now, obviously, I entered a long, so I do expect in the short term the probabilities are still higher towards the upside, because, well, in a falling broadening wedge, the upside is still the higher probability than to the downside. But I hope that explains the reasoning behind the positions and behind the prices that I'm talking about. So we have that same pattern, of course, on the RSI. When we are, I have to change this again because I just and this one here. Boom. And as you can see right now, we are trying to be breaking this trend towards the upside right now. It's still very, very weak. We will have to wait until, you know, the 4 hour candle closes. Like I said, this candle is currently a doji candle, but we'll have to wait for another like 10 minutes for it to be confirming if it was on the positive side or the negative side. But right now, it still looks like holding the green box on this daily. So we are grinding near, as you can see, very near breaking of this falling channel once again on the daily, right? So what I'm trying to say is, well, the bulls are actually on the clock right now, right? So the bulls are on the clock right now. They have to be taking matters into their hand, like I said, within this week. It has to happen within this week, or else all the momentum and all the indicators are showing towards the downside. The bearish divergence will be confirmed on the weekly, and that will be the biggest problematic moving on into the next week, of course. But for now, like I said, I still aim for the higher probability that we are be going towards the next box, towards the top side of this green box, rather than to the downside. But like I said, my risk is very, very defined because of the action that happened yesterday, and with this candle showing me basically the structure that is being formed right now, or the descending broadening wedge that we are forming right now, with this beautiful stop loss position. Like I said, if we do break down one more time over there, I do expect us to be going down, resolving the whole trend towards the downside rather than the upside, right? So those are the key levels that we've spoken about yesterday as well, because on the 3 day and the 2 day chart, I've told you guys 9,250 and this price basically confirms it one more time, 9,220, that range basically. If we start closing candles below that, in that area, things will look very, very bad very, very, very quickly, right? So let's take a look on the weekly chart. This is the weekly chart. So two things that I wanted to show you guys on the weekly chart is, of course, let's go back one more time and show you guys the bearish divergence that we are potentially going to be forming. So as you can see here, we have a higher high in the price, while the RSI did a lower high on that spot, as you can see here. Boop. This is a little bit exaggerated, but it is it is correct. So if we can see here on our cheat sheet, if the price is making a higher high on the price and a lower high on the RSI, that is bearish regular divergence, as you can see, right? So here, this, if this is a top, then this could be potentially bearish divergence. Well, how can we negate that bearish divergence? Is, of course, if the next weekly candle becomes a higher high, right? If the next weekly candle becomes something like this, then this bearish divergence is negated, right? It's no longer valid. It will become something like this, right? If you understand the logic behind it. So this is potential weekly bearish divergence. It's not confirmed yet. It's not confirmed yet. All the bears should not be crying, you know, be super happy and be partying just yet. Although things are looking quite, you know, and definitely here looking quite toppy in terms of like the Stokes and on the week as well. But like I said, wait for confirmations, because in a bull market and strong bullish move and trends, everything on the Stokes definitely show it's normal that we hang around on this bullish side for a while, just going sideways here on the weekly. That is actually very, very bullish as well, right? So don't be mistaken just yet, but this is quite very, very dangerous. Like I said, the clock is ticking for the bulls. If we are going to be confirming this weekly bearish divergence, that would be very bad, obviously, coming into the next week. So that's basically what we're looking at right now, right? So the last couple of days that we have right now before the week ends, we kind of will know what the trend will be for the next upcoming couple of weeks and month, potentially, because of what is going on for this week. So that's the reason why I keep saying this week is most likely one of the most important weeks for Bitcoin right now, because we really, really need to be breaking upwards very, very soon, or else, you know, it will be a big retracement to the downside first. Like I said, most likely somewhere around 7.5k, where we can create another local low or something like that before we can talk about reversals. And then there are people who are saying that we can have an inverse head and shoulders, but like I've explained to you guys before, that inverse head and shoulders pattern there, I really doubt it that that will be a reversal pattern. It doesn't look very good on that spot as well. So I don't think we will get it will work out, that inverse head and shoulders as well. Some people, I mean, I've seen it on some people calling this also inverse head and shoulders, what we are forming right now here, this one. So they're saying this is some sort of like a inverse head and shoulders. This is technically not an inverse head and shoulders, so sorry. This is not an inverse head and shoulders as well. The whole pattern and the whole volume signature does not match the inverse head and shoulder pattern, but we did get 3 drives towards the downside in terms of like divergence. So we got 3 drives towards the downside. So that does, you know, usually after 3 drives down, we usually do get a reversal pattern, right? So that's what is interesting, and that is what is correct. So we got 3 drives down now, although we didn't create any divergences. It usually forms a reversal pattern. So the possibilities or the action is pretty much the same as an inverse head and shoulders, but it's technically not an inverse head and shoulders. That's all what I'm saying, right? So yeah, sorry for the TA guys who are thinking that this is an inverse head and shoulders. Well, it is not. But anyways, those are just little things. Anyways, so I'm looking at this as a broadening wedge right now, and yeah, I'm waiting for this to be confirmed, and of course, breaking up towards the upside after falling down. So that's what I'm waiting for in the short term, right? But yeah, I was talking about the weekly chart, and now I'm moving immediately back, moving a little bit back and forth a little bit too much. Anyways, so the weekly bearish divergence could be confirmed this week if we confirm that this was a local top, right? If this is a local top, then we have bearish divergence. If we are looking on the 3-day chart, let's go back into our candles. If we are looking on our 2-day charts, like I've explained before, above the EMA 21, below the 10 simple moving average. So we need to be breaking above the 10 simple moving average. On the 3-day charts, that's right now at 9,556, which is, I mean, it's very near. Like I said, it's very, very near. And as long as we keep closing above the EMA 21, obviously it's very, very, very good. But momentum, Stokes are curling down, so momentum is waning. Like I said, we need to act very, very, very quickly. The 2-day is even more interesting, as we can see right now, of course, above the EMA 21, but below the 10 simple moving averages. And as you can see, 9,585 is the key area. If we close tomorrow, because the 2-day candle is going to be closing tomorrow as well. So the 1-day and the 2-day candle is going to be closing tomorrow. So if tomorrow, if we manage to break and close above 9,585, that will be, for me, one trigger, once again, a trigger for me to be sighing a breath of relief, because most likely that will confirm for me that we'll be moving towards the next top. And like I said, most likely that will be around the 10.5k area or something like that, because there's very little in between that is going to be stopping. And yeah, around 10.4, 10.5 area is what I'm saying, what I'm thinking. And then the EMA 21 is at 9,268. I've told you guys before, two conditions: closing below the 2-day, closing below the EMA 21, so closing below 9,268, which is where the EMA 21 is right there. That can cause the catalyst towards the downside, because then, of course, all the averages and all the Stokes and all the momentums are going to be crashing towards the downside. And that's why this candle of 9,220 is so important, because that's that area, right? That's that area. If we close, like I said, if we close below the 9,200 and whatever it is right now, and that area, we'll be heading towards the downside. Doesn't mean that we'll be immediately crashing towards, you know, that there's no support anymore. It just means, like, yes, we'll be going back down here towards around, immediately, most likely around the 9k-ish area, have a small push, and then break down all the way, most likely back into our 8.6k, and then all the momentum indicators are showing, you know, the domino stone has then fallen for the week. And then next week, of course, we'll have weekly bearish divergence, like I said, and then we can expect more continuation towards the downside. So then we'll most likely get some dead cat bounce, and then fall back down even harder towards the next green box towards the downside. That's just, you know, how domino works, right? One little stone to the other. So that's the reason why those two numbers or areas are so important, right? So we are still wedged in between those two moving averages. So nothing is concluded just yet, but it gives us, like I said, it gives us a very strong edge in terms of like prices, where we can decide which way or which direction we can go. But like I said, 9,250 area, if we close below the EMA 21 tomorrow on a daily basis, I'll be very, very quickly and switching down towards and switching over into a short. If we close above 9,585 or our 10 simple moving average tomorrow, I'll be, you know, sighing a brief a breath of relief, because most likely we'll be heading towards, like I said, 9.8k-ish area first, and then eventually, most likely, this next green box here, right? So we break out of this channel here, maybe like something like this a week, and then moving up higher like that. So one of that's basically the two moves that that there is in line for this week basically. So either we do something like this where we break up towards the 10.5k, or we get rejected here, we get back down towards this here 9k ish area, and then break back down here. And as you can see, we are smack in the middle right now, where we are at right now, and one of those decisions will be made this week, right? So that's the move. That's the move for this month, basically. That's the big move. The problem is not only this move will decide on a midterm macro perspective level, because if we do move around here towards the 10.5k, I do believe that, you know, after trying to be this whole channel here, this whole channel will be resolved as well. Like I've explained before, most likely then we'll be seeing prices towards the 11.5k. But if we are going towards the downside, then this whole channel will be breaking towards the downside, and then the measure moves will, of course, going to be down to this side, around our 7.5k, right? So as you can see, it is very beautifully structured right now. Is this going to be breaking up towards the upside or the downside? I can't tell you, right? The only thing that I can tell you is technically we are still in an uptrend, right? Technically we are still in an uptrend. So that's basically where we're at right now. But like I said, on the shorter time frames, we can see that we are forming some sort of a broadening wedge, right? Descending broadening wedge. So usually it has more probability to be breaking towards the upside than the downside. But like I said, the market is going to do what the market wants to do. So if we don't break up from this area very, very quickly here, most likely today, tomorrow, it's the end of the road for the bulls, to be honest. And then we'll do something like this, right? It doesn't matter what time zone you're using, James. It just closes at the same time, right? So it's midnight UTC 0, right? So for me, it's 8 o'clock in the morning. James, can you retract your comment, please, or else it will keep on repeating. There's some error apparently with the streaming of the YouTube streaming service. But yeah, it's midnight UTC plus 0, so that's it's the same time for the candle closes at the same time for everybody, right? There's no difference in that. But for me, of course, it's UTC plus 8, so it's 8 a.m. for me. Yeah, we'll have to wait until James retracts his message on YouTube. Yeah. Michael, you were saying if you can predict the volume on the 24-hour, it's very hard. It's very hard. The only thing that I can say in terms of volume is something that it's quite interesting as well, right? So what happens is when volume tails off, we get into a big move, right? So if we are taking a yeah, I know. Can you just retract? Can you just delete your comments or your messages in YouTube? Retract it in the chat, please. Or else it keeps repeating. Yeah. Anyways, for the volume, we can see here, volume is tailing off, as we can see, right? And when it goes into around 75% of the triangle, it usually spikes up or makes a move, right? So as you can see right now, it's tailing off right now. So I would say at latest, as you can see, at latest it will be on the 17th of July next month, where we will have that macro change or macro behavior movement. So this month is basically setting up for that big move. That's what thanks, Darway. James, can you delete your message as well? Okay, I think it's okay now. It's okay. The last person, if the last person deletes, retracts his message, then apparently it's fine. But anyways, so on the volume, what we can see is it has been tailing off right here, as you can see, and it never reaches the end point of the triangle, right? So usually what happens is we get the big move around 70 to 75% before it completes, and as you can see right now, we're nearly there, right? So the big move is very, very soon. That's the only thing that we can say about the volume, right? Would it be wise to be putting two positions, one short and one long? Yeah, of course, Nikolai. That's basically if you know how to use options, that's the reason why options are very, 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 very cool to be covering that kind of spreads. But in terms of like margin trading, yeah, that's so for people who are not in a position, right? It's quite easy. Well, not easy. It's quite clear what you can be doing. If you want to be more certain, then there's two things, right? Either you wait for either you wait for 9.6. Why it keeps what is this? The fuck? Okay, now my trading view is doing weird stuff. Okay, cool. So you can wait for two things, right? You can wait for either one, a candle close above this VWAP right here that would confirm our structure. So a candle close above 9,521. Well, let's call it 9,525. Okay, let's type it down here. So let's say the 4 candle close above 9,555. That would be I signal to be longing for me, but I'm already in a long. But I'm just saying, if you were not in a position, I would be longing there, and then price above previous high. The previous high was 9.6, right? So yeah, those are the two things that I would be looking at. So either a close above this area here, or this red line. Ooh, why is everything lagging suddenly also? God damn it. 1 second. Let me see if something is wrong here. Okay, so a candle close above this red line here. That would be for me a long, and or the price just trading above this 9,600 here, or their previous high, because both of that would confirm my my pattern, basically, right? It would be the break that we've been talking about. So those two things would be confirmation for me. Then what would be my bearish trigger? Let's put it down. So bearish trigger would be candle close tomorrow, because the daily or the 2-day candle, 2-day below EMA 21, which is currently at like 9,200 and 1 second, let me see, 9,268. Okay, 9,268. I look like Jackie Chan. What the fuck? What the fuck, man? You're so racist. All the you think that all Asians look alike or something like that? Come on. I look way more handsome than Jackie Chan. Come on. Anyways, 9,000 currently at 9,268, or a spike below this previous low here at 9,219. Okay. let's call it 4-hour candle close below 9,219. Okay. There. Which is here. Okay. So I typed it all down right now. So those are basically the trigger points for me. First of all, those are trigger points for me. I'm not a financial advisor. This is not financial advice. Whatever you do with your money is your own responsibility, of course. So don't take my word for it. I'm just drawing up and giving up my own personal opinion, right? So those are the two triggers. If I would not be, and to be honest, it would be better to be not in a position right now because the move is so much bigger. But experienced traders, obviously, like I said, experienced traders know when to switch over or when to, you know, immediately take that hit or take that loss. I mean, I'm used to this kind of moments already, right? So those are the two things that we're looking for, right? But right now, of course, the bias is more towards the upside than the downside, right? Because of the pattern, because of this, as you can see right now, RSI it's pretty flat, but it can spike up at any time and point because we are breaking out from this formation, right? So let's take a look on the expected moves because we just had our candle close, and yes, we did get our doji candle as well. So yeah, for the people who understand the doji candle, this is going to be our waypoint as well, right? So now we have even more information, right? So we have this previous candle, we have this area or this 9.5k, which is also, of course, the simple moving average on the 2-day, which is this one here. See, 9,585, right? So that's around that area as well, right? So we have even more information right now with this doji candle, right? So this doji candle is now giving us even more higher probability. So this is the top, 9,495. So if we spike above 9,495, most likely more bullish. And if we spike below this, oops, what is it? 9,376. 9,376. Obviously, the decision is towards the bearish side, right? So that is giving us more information as well, what the trend is going to be, and yeah, so we're you know, it will give you a better perspective or a better trading entry or exit, right? So that's what we're looking at right now. I'm just waiting for this to be resolved, and it kind of has to be resolving in the next couple of days because, of course, everything is still flashing on the HVP, right? But before we go to that, let's take a look first on the 12-hour EMA or the expected moves, right? So for the expected moves, yeah, kind of pretty similar. What the top range is most likely around 9.6, and the bottom range is most likely 9.3 or something like that. No, a little bit lower, 9.2. Sorry. So 9.2 and 9.6 is most likely the ranges that we're talking about. So let's take a look what the expected moves chart says. Expected moves charts is saying first standard deviation to the top side is 9,588. First standard deviation to the bottom side is 9,257. So as you can see, would that resolve any of the ranges if that would be the candle close, right? No. And that's how sick it is, right? Because 9,588, if we would close our daily candle, it would be here, right? Just right at our 10 simple moving average, just right there. So it wouldn't go, it wouldn't resolve it. And 9,258, something like that, it would be right at the EMA 21 as well, just right there as well. So it would kind of not resolve the situation as well. So yeah, just saying, it's we maybe have to wait another day, like maybe one more day that we have to wait, maybe. But yeah, That's what the expected move charts is saying, but it is curling a little bit more towards the downside than the upside. So that's quite interesting as well, right? Right now it's curling a little bit, but 12 hours to go, of course. Still a lot of time to be going. What I'm looking at is, of course, the Stokes. As we can see right now, I've already put in the patterns or the resistance lines. If we get rejected here, you know what time it is. So if the 12-hour Stokes get rejected here, that's pretty bad. If we get a push up towards this here level here, then most likely we'll be breaking up towards 9.8, 9.9k, near the 10k ish area. If we break above this red line towards this highest line, most likely that's where we're at like, you know, 10.5k, or where I do expect us to be going, right? But of course it can be rejected. RSI, can we see something on the RSI? RSI is currently below the EMA, but it's at 9,431, so nothing that spectacular, that special. What we can clearly see also on the HVP is right now on the 12 hour it's starting to be very, very low. As you can see on the 12 hour it's starting to be very low. Let's take a look on the daily Stokes. As we can see here, I've formed the bottom. We are at that support line, right? So like I said, if tomorrow shows weakness, most likely we'll be breaking, the Stokes are going to be breaking towards the downside, and then you can expect bigger retracements towards the downside. So but like I said, we are at support right now here. If we break towards the upside, a lot of space towards to go towards the upside as well, right? HVP is of course flashing on the daily. As we can see, it's currently at 0, so red zero. So like I said, we will have a resolution today, tomorrow, or something like that within this week for sure. So that's why it's so key or so crucial to be, you know, be prepared and having your master plan and having everything ready. Let's take a look on the RSI. Still below, but 9.5, it's not that too far away, and 9.515, so yeah. Trends, yeah. It depends on what you're trading, right? If you're trading margin, you it's better to have preset everything. If you're trading options, you can also put or manage your risk of hedging your risk of your margin trades as well, right? But yeah, it's always better to be preparing yourself and being aware of things real time, of course. Okay, so yeah, daily, very, very critical right now. Everything is very critical right now. 4 hours, let's take a look at the 4 hour. 4 hours still curling down, but as you can see right now, kind of wants to be curling back up, so it's possible that it can curl back up as well. Let's take a look. I just wanted to take a look on the CCI. CCI is curling a little bit to the upside as well for the 4 hour. So yeah. Let's take a look. RSI is currently below, but it's at 9,000. It's basically right at the EMA, so you know, nothing can be said over there. One thing that also I wanted to show is there's potential on the short term, potential bullish divergence as well. Let me show it to you as well on the 4 hour. Let me first remove this picture. Everybody kind of knows already, right? Let's go to the 2 day. And then to the line. Okay, I'm not gonna remove that one, so it's the same. But we are forming a potential hidden bullish divergence on the 2 day as well. But it's, of course, it's not confirmed just yet, right? It's nothing confirmed. We're gonna show it here. So bullish divergence where we get a higher lower high, sorry, a higher low on the price, but a lower low on the RSI. Let's go back to the chart. You can see it here. Boom. Up. So we have a lower, as you can see here, a higher low on the price, and then we have a lower a lower low on the RSI, as you can see here. Yeah, there. It's not really a lower low just yet, but it's, if you can see it, it's like a horizontal basically. So it's technically, well, it's still a hidden bullish divergence, right? But technically, it's a very weak hidden bullish divergence. But it's there, it's there. But of course, once again, it's same as the weekly candle. The 2-day candle is not confirmed just yet, so it is potential hidden bullish divergence. So that's also a key point to put into consideration for tomorrow, right? So if the 2-day candle tomorrow confirms that hidden bullish divergence, then that hidden bullish divergence is going to be working out, and that will negate the regular bearish divergence on the weekly, if you understand what I mean, right? So if that works out, then it will become the weekly bearish divergence is going to be negated. But if the 2-day hidden bullish divergence gets negated by the price going down more, and the RSI not creating that hidden bullish divergence, then of course the bears win, and then the price is going to be crashing, and there's no bullish divergence. Whew. Wow, so many. I hope you still understand a little bit the concepts that I'm trying to explain here. It's a little bit it's starting to become a little bit complicated, but like I said, once you get used to all of that, it's like a domino game, like I said, right? The short-term effect or can change the higher time frames, and the higher time frames basically is the macro perspective, and the lower time frames cover the shorter time frames, of course. So yeah, whew, I think that's enough. I think that's enough for today. That's already enough technical analysis for today. I think a lot of people will be like, "What the fuck?" Yeah. So what is going on here? Anyways, in short, in a long, waiting for this basically to be maybe it will take a touch of this liquidity, but it cannot take too long anymore. Hopefully later tonight, on the next 4-hour 12-hour, we will see what is going on. But yeah, I keep saying it, this week is going to be very important. Time is running out for the bulls. Kind of has to happen this week. If not, we will be seeing a lot more bearish action over the next couple of weeks. But if the bulls take things in hand and push the price up, then things can look very, very good very quickly as well. And oh yeah, maybe take a quick look on the Nasdaq or on the traditional markets. What happened there? Okay, so currently we are having a little bit of a pullback as well, or hesitation also on the traditional market, but we're still holding the EMA 21, which is obviously the most important thing. If we break this previous body here, previous low, that's not good. So 9867.5, that is basically the key number here. So if we close below 9865.5, yeah, that means that we'll most likely break down towards the 9.7k ish areas, and then obviously Bitcoin is going to be pulled down, and then yeah, I don't have to explain to you guys, the domino is going to be falling once again towards the downside. So yeah, that's the number that I will be looking at, 9865.5. Let's see what the traditional markets does. So for the next 2 days, because Friday of course is going to be closing the traditional markets, so that will be the weekly close for the traditional markets. So it will give us all the information as well, more information, let's put it like that, for what Bitcoin is going to be doing. But for now, yeah, still expecting a little rally towards the top side. Probabilities are still a little bit higher towards the upside because of formation, because we are still, like I said, technically in a uptrend, because this channel is of course still a channel. We are still making higher lows, right? But there is starting to become weakness, because we have our daily close below the EMA 21, and now if it would be the second daily close below the EMA 21, that would be of course very, very bad, right? That would be very, very bad. So if we keep closing below the EMA 21 for tomorrow and the next day, yeah, I think it's over. I think it would be over, because once again, this 10 simple moving average would be making a bearish cross below the EMA 21. The momentum would be gone, and yeah, I would, like I said, I would then be very happy to be starting to think about shorting positions, because that's what basically what is going to be happening. I have my doubts after retesting the EMA 55 so many times. I really have my doubt that we'll be holding this support line here for so many times, after touching it for so many times. Well, crazier things have happened before, but I highly doubt it, with all the momentum indicators on the higher time frames pointing downwards, right? So, yep. But yeah, like I said, we're not there just yet. We will know in maybe tomorrow, tomorrow. Then we'll know a lot more. But for now, very, very, very interesting points and key points as a trader, in the trader's perspective. You should not. You should be like Nikolai. You should not really be caring and just waiting and finding the right correct entries and the right correct positions, because the move is coming. The move is coming. Okay, I just wanted to see if we closed the 4 hour above or below the EMA 21. We closed just below the EMA 21. Oh, it's really funny. Just below the 4 hour, but it's a huge doji candle, right? So. Crazy. But yeah, it's almost there, guys. It's almost there. So this week is going to be, like I said, this week is going to be super, super crucial. And the next couple of days, yeah. Oh yeah, one more thing for just before I wanted to show this as well. So we have the HVP that is flashing on the daily, but not only that, we also have the HVP flashing on the 2-day candle, on the 2-day chart. And of course, the higher the time frame, the bigger the move on the HVP, right? So let's see. Oh, J Constant, I have no idea. It looks, for me, to be honest, it looks good. It looks like we're going to be recovering, but yeah. It all depends if we are going to be holding this EMA 21 here, right? So I'm just looking, and I've just explained it. I'm just looking if we are holding the 9,865.5. That's basically the number that I'm looking at. If we're breaking that number, 9,865.5, I'll be starting to short not only stocks, but I'll be shorting everything basically. Also Bitcoin. So Bitcoin, Nasdaq, SPY, everything. Yes, Arifa, you'll get banned. Anyways, that's it for today. I think this. Please rewatch this video, because there was a lot of things talked about today. Right? Okay. Hope that was informative, and see you guys same time tomorrow, 7:30 p.m. UTC +8. Same time, same place on YouTube or on the Facebook. And yeah, hope to see you again tomorrow. Please, until then, please stay home, stay safe, and of course,